Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this UI. And there will be option for home, all courses, my courses and down section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend you can read after reading the PDF. You can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Today, we will be covering August 3rd week banking and finance awareness news. Moving to the first news. The first news is about the highlights of the RBI's third bi-monthly policy meeting. So RBI has kept few rates unchanged. So let us look into the details. So this, if you see, is the 50th MPC meeting. So MPC committee was formed in 2016. So since then, this is the 50th meeting that is happening now. So RBI has kept almost all the rates unchanged. So if you see, the policy repo rate is at 6.5%, fixed reverse repo rate at 3.35%, STF at 6.25%, MSF 6.75%, bank rate 6.75%, CRR, that is cash reserve ratio, at 4.5%, and SLR at 18%. The RBI, if you see, the last time it had changed the policy repo rate was in February 2023. It was the last time that it had changed, and after that there was no change in this policy repo rate. So RBI had brought certain proposals in this monetary policy meeting. So let us see them one by one. The first one is that RBI has planned to raise the tax payment limit through UPI from 1 lakh to 5 lakh. You note that the general UPI limit is 1 lakh. But for certain transactions alone, the limits have been raised. So if you see, in December 2023, RBI had changed the UPI transaction limit from 1 lakh to 5 lakh for hospital transactions, education institution transaction. For this and all, the limit is 5 lakhs. Similarly, now for the tax payment, the limit is planned to increase from 1 lakh to 5 lakh through UPI transaction. So the general limit is 1 lakh. For capital market transaction, for collections, for insurance, for forward inward remittance, the limit is 2 lakhs. And similarly for IPO, retail direct scheme where you buy the government securities, hospital, education institutions, here it is 5 lakhs. Second proposal is to allow users to share one bank account for UPI payments. This is delegated payment. So here there will be a primary user for a UPI. Say there is a UPI ID and the UPI ID will have a bank account linked to it and there is a primary user. Now, if there is another person in the family, say that there is a son in the family and he has just got into college. So if he wants to make any small payment in the canteen or something, what the father can do is that the father can designate that person, son, as a secondary user. The secondary user of that UPI ID. So this same person, the son, can use the UPI ID of his father as a secondary person. Now this primary person, that the father will set a limit on how much that secondary person, that is how much his son can spend through the UPI ID. So there will be a primary person. He will set a limit for the secondary person. The secondary person can use the same UPI ID and can make a transaction up to that fixed limit. This is the purpose of this delegated payment. If you see delegated payment, individual or the primary user to set a UPI transaction limit for another individual, that is a secondary user on the primary user's bank account. So delegated payment, this is another proposal by the RBI in the MPC meeting. Next is that RBI proposes new measures to tackle unauthorized digital lending apps. So you know that there are a lot of lending apps available in the Google Play Store. So you can download it and they will lend you money. But sometimes what happens that they are fraud apps. They are not allowed to lend money. They will just collect your details and just go away. Or they might, collect money or interest, large amount of interest from you. So there are a lot of fraud apps that are available in the Play Store. So to curb that, to reduce that, RBI has bought this. So there will be a repository. So in this, what will be, all the digital lending apps should be mentioned in this repository by the regulated entities. So all the digital lending apps will be associated with some or the other regulated entities. So all these apps should be mentioned in this repository by the regulated entities. So RBI will not intervene in this. So RBI has nothing to do with this. Only a repository will be created by the RBI and all the data uploaded in it will be by the regulated entities. So if there is any app that is being removed by the regulated entity, that should also be removed in this repository, and that is the duty of that respective regulated entity, and RBI does not intervene in this. So repository will be operated by the RBI regulated entities and will be responsible for reporting and regularly updating the information about their digital lending application in this repository. This is a third proposal. Next is that RBI proposes continuous clearing of checks under CTC. CTC is check truncation system. Suppose you go, there is an SBI bank. Okay, so you are a customer of this SBI bank. So someone has handed a HDFC check to you. Okay. Now what you do is you go and hand over this HDFC check to your SBI account branch. Now they will put this HDFC check in their CTS, that is check truncation system, and then that amount will be cleared and it will be credited to your account in the next working day. So it generally takes 2 working days. Generally it takes T+1 working day. You hand over the check today and the amount will be credited only tomorrow evening in your account. This is the procedure of this check truncation system. So CTS, it currently takes 2 working days. And here, so now what they have told is that it has to be cleared on a realization settlement. So I have given the check today. So it has to be cleared today itself. That is what it has proposed. So reducing from the T+1 day to a few hours. So instead of T+1 day, this check should be cleared within few hours and the amount should be credited to my account. This is the fourth proposal by RBI in this MPC meeting. Fifth one is RBI shortens frequency of bank reports to the credit information companies. Now, what is this credit information companies? they provide you the credit reports to the banking institutions or the financial institutions. So when you take a CIBIL, right, this CIBIL is provided by these credit information companies. Generally, if you see, the banking or the financial institutions, they provide their data to the credit information companies monthly. Monthly, they report the data to the credit information company. Now, what RBI has proposed that let us reduce the cycle from monthly to every 15 days. So why there is a reduction? Why the RBI wants a reduction in this? One reason is because if there is a reduction, see, one customer will go and get a loan from one bank A, and after 20 days or 25 days, it can go to another bank and get another loan. But this loan A details, the loan that the customer has got from bank A, that will not be visible when this bank B takes a credit report after 20 days. This will be visible only after 30 days. So in that case, within 30 days, what the customer does that they go to multiple banks and take a loan. So this is one reason why it wants to reduce. And second is when a customer closes the loan, it takes 30 days to reflect in the credit report. So only after 30 days, he can go and borrow the loan from another bank. So this, if it is available after 15 days, then he can go and avail loan after 15 days itself. So this is a helpful situation both for the lender as well as for the borrower. That is why the RBI plans to reduce the frequency of the bank reporting to the credit information companies from 1 month or from monthly to 15 days. The frequency of reporting credit information of the borrowers to the credit information companies to 15 days from a 30-day period. So this will be effective from January 1st, 2025. So these are the various proposals brought by RBI in the MPC meeting. So if you see the forex, it has reached the level high. So currently the forex reserve maintained by RBI is around 675 billion. So India forex reserve touched a record high of 675 billion as on August 2nd, 2024. The next news is about Government of India relaxing the long-term capital gain rules for the property owners. Now, what is this long-term capital gain? This long-term capital gain arises from a selling of a property. Suppose you buy a property and if you sell the property after 24 months, then the profit that you gain from the sale is called as long-term capital gain. But if you sell the property within 24 months of purchase, then it comes under short-term capital gain. So the taxation is different, that is the tax rate is different for both the gains. So for the long-term capital gain, currently if you see in the last financial year and all, if you see it was taxed at 20% with indexation benefit. And now a change has been brought in this taxation. So let us look into the details. So if you see in July 2024, the Union Minister Nirmala Sitharaman had proposed to reduce to the long-term capital gain tax on the property from 20% to 12.5%, but removed the benefit of indexation in the Union Budget financial year 2025. So if you see previously in the last financial year and all, the taxation on the long-term capital gain, that is you buy it at one price and then you sell it at a higher price mostly, right? So from that you will gain a profit. So you will gain some profit in that will be taxed. So previously if you see it was taxed at 20% with indexation benefit. But now it has been reduced, the tax rate has been reduced to 12.5%, but at the same time this indexation benefit has been removed. So no more indexation benefit. Now what is this indexation? So when you adjust the inflation part in your investment, so when you adjust this inflation into your investment, into your purchasing price, then that is called as indexation. So adjusting or recalculating the purchase price of the asset after adjusting with the cost inflation index. So depending upon the inflation, how much ever is the inflation. So if you see in this financial year 25, RBI has projected that it will achieve 4.5% inflation, right? So each year, depending upon the inflation, a cost inflation index has been calculated and released by the income tax department. So income tax department is the one that releases this cost inflation index, and this cost inflation index is used to calculate the purchase price. Remember, to calculate the purchase price and the sale price, this cost inflation index is being used. So let us see with an example. If you have bought a house in 2005 at the cost of 2 lakhs rupees, now you are planning to sell it in 2018 at the cost of 7 lakh rupees. So this is the selling price and this is the cost price. Now, how do you calculate this indexation cost? See, if you see, this is the cost inflation index released by the Income Tax Department for 2005 and this is the cost inflation index for the year 2018. So this is the formula to calculate this index cost. So if you see, index cost is equal to the original cost, that is 2 lakhs, into the CII of the given year, that is the year that you are going to sell this property. So you are going to sell it in 2018. So the CII is 272 divided by the CII of the base year, that is the year that you have purchased. So in that case, it is 113. So when you put the numbers in the place, you will find that the indexed cost is 4.81 lakhs. So if you see, this index cost will now be considered as the purchase price. So you have to calculate the gain from this purchase price. So if you see, previously the purchase price was 2 lakhs. So the gains would have been 5 lakhs. Now, since this indexed cost has been reduced to 4.1 lakhs, if you see, this has been reduced almost to 2.2 lakhs. So if you see, the gain has reduced almost more than half. So this indexation benefit, if you see, this will increase the purchasing price, which means that it will reduce your gain because the inflation part is included in this calculation of this index cost. So this is the main purpose, or this is the benefit of this indexation. So if you see, the benefit are asset value is adjusted according to the inflation. So inflation part is considered and then the tax burden reduces. Since the purchase price increases, so the gain reduces. So this in result will reduce the tax that the buyer should pay to the government. So tax burden reduces. The seller, whatever tax he has to pay to the government, that reduces because of this indexation. So the tax burden reduces due to the adjustment in the asset value. So indexation motivates investors to be invested for the long term. So this is an encouragement that it is an encouragement to the investors to go for a long term capital gain. So because this indexation benefit is not available for the short term capital gain, it is only available for the long term capital gain. But now a lot of people were against it. A lot of people requested the government to include the indexation benefit because it will be a huge loss for them. So they had requested the government to include the indexation benefit. So now what our government has told that now the property owners will have the option to choose between the two tax rates. That is, they can choose 20% rate with indexation benefit, or they can choose 12.5% rate with no indexation benefit. It is up to the property owners. So they can choose anything among this. So whichever is beneficial for them, they can choose among this. But this is only for the people who have bought properties before July 23, 2024. So if you have purchased a property before July 23, 2024, then you can use any of one of the methods from these two methods. But if you're planning to buy property after July 23, then you can use only this 12.5% with no indexation method only. So I hope you understand. Two methods, 20% with indexation, 12.5% with no indexation. So people who have bought property before July 23, 2024, they can use this method, any one of the two methods, whichever is beneficial for them. Now, so who are eligible for this using of one of the two methods? They are individual, HUF, that is Hindu undivided family, who have bought the house before 23rd July, and also this is applicable for both residential and commercial properties. But this is not applicable for the NRI, companies and LLP, that is limited liability partnership. So this new thing is not applicable for the NRI, companies and LLP, but this is applicable to the individual and HUF who have bought the property before 23rd July, and for both residential and commercial properties. So this is a major change that have been brought for this long-term capital gain regarding housings. Next is about India's merchandise export expected to grow by 4.2% in the Q2 financial year 25. So this is as per the report released by the EXIM, that is Export Import Bank. So the quarterly report of the Export Import Bank, it has told that it has said that in Q2, that is Q2 financial year 25, the merchandise export is expected to grow by 4.2% compared to the Q1 financial year 25. The increment is going to be 4.2% in the Q2. So it is expected to reach 101.7 billion. So in quarter 1 financial 25, the export was 109 billion. So from 109 billion, it is expected to grow to 111 billion. The main reason for that is sustained momentum in both manufacturing and service sector and expected global monetary easing. So it is expected that the central banks around the world will reduce the interest rate. So since inflation is reducing little by little, so they are expected to reduce the inflation rate. So this due to that monetary easing is expected, and this is also one of the reason for the strong activity, and also improving demand prospects from the trade partners. So these are the main reason to show strong activity in Indian economy. But along with these good conditions, there are certain risks also associated. So what are those risks? Uncertain economic prospects in advanced economies, geopolitical tensions, ongoing conflicts in West Asia, global supply chain disruptions, and deepening geo-economic fragmentation. So these are the various risks associated which can affect the export of the country. So if you see India's trade deficit, it has been a 7-month high in May 2024. That is, it was 23.78 billion. So when this trade deficit happened, when your imports are more than your export, then it is called as a trade deficit. So here if you see the trade deficit in May 2024 was 23.78 billion. It has reduced to 20.98 billion in June 2024. So the export-import managing director is Harsha Bangari, and it is headquartered in Mumbai, Maharashtra. The next news is about FPI investment. So SEBI has recently released a report, and in that it has told that the USA accounts for the highest FPI, it is foreign portfolio investment in India. We know that there are two types of investment. One is FDI, that is foreign direct investment. Another one is FPI, that is foreign portfolio investment. So here they directly invest in the long-term capital. So if you see in manufacturing sector, in constructing companies and all, they also increase the labor also. They invest even human capital. They provide employment. This is foreign direct investment. But here foreign portfolio investment, they invest in financial asset like shares or bonds. So as soon as they gain enough money or they gain enough profit, they sell the assets and they go outside India. They repatriate their amount back to their own country. This is the foreign portfolio investment. So as per this report released by SEBI, USA has led the foreign portfolio investment in India in financial year 24. So first is USA. The maximum FPI has been from USA. The second is Luxembourg, and the third one is Canada. In case of equity, so foreign portfolio investors, they have equity as well as bond part also. But equity constituted major portion of this FPI. That is, it constituted around 92.2% of asset under custody. So if you see in equity, the maximum has been from USA, next is Singapore, and next the third one is Luxembourg. So remember, overall FPI, first is USA, second Luxembourg, and third Canada. But in case of equity, here also the first position is by USA, but the second and third is by Singapore and Luxembourg. Do remember this, it's very important. Next, if you see the financial 24, the asset flow has been increased. So the asset under custody in financial 23 was 48.7 lakh crore. It has increased by around 42% to 69.5 lakh crore in financial year 24. So in financial year 24, it has increased to 69.5 from 48.7. Similarly, the number of foreign portfolio investors have also increased from 11,081 to 11,219. We have launched a new course called Static Banking Awareness Course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness Course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. The next news is about RBI forming a 10-member expert committee to benchmark its statistics with the global standards. So RBI has constituted a 10-member committee which is chaired by Dr. Michael Debatra Patra, that is MD Patra, the Deputy Governor of RBI, to benchmark its regularly disseminated statistics against global standard and best practices. So if you see, a lot of statistics are released by RBI. They are consumer confidence survey, balance of payment, foreign trade statistics, India's external debt. So all these survey, they are conducted using various parameters are used, and the weightage for each parameter is different. So here this committee is formed so that all these statistics, they are in align with the global standards and practices. So if you see, these kind of surveys also take place in other countries around the world. So they want to ensure that this is in line with their standards as well. So that is why this committee has been formed. And also apart from that, they also want to tap into various other surveys that has not yet taken place. So if you see, a lot of things. So if you see where benchmarks are absent, so the committee has been entrusted with the responsibility to assess the quality of other routine data in sectors where benchmarks are not present. So various other data we have not yet been tracking or not taking the statistics of those data, like the sectors of national security. All these also, it should be taken or not, whether other countries are taking, so how it should be taken. So all these details will be looked into by this committee, and they have to submit the report by the end of November 2024. And as I said, this committee will be chaired by MD Patra, the Deputy Governor, and other 9 members will be a part of this committee. That is Dr. RB Burman, then Professor Soneldi Desai, and then Partha Ray, Bimal Roy, and then Paul Schreier, Sudarshan Sen, then Bruno Tissot, Munish Kapoor, and OP Mall. So these are the other members of this committee. I mentioned in the comment section that recently there was a committee formed to look into the white label ATM fees. So regarding the fees levied by the white label ATM, the transaction fees, the non-financial transaction fees. So regarding that, a committee was formed. Name the head of the member of that committee. The next news is about a Power Finance Corporation securing 25.5 billion Japanese yen loan for a wind project. If you see, the Power Finance Corporation, it has received 25.5 billion Japanese yen from the Japan Bank for International Cooperation. This is to invest in the wind project of the OKPPL, that is Austro-Canada Power Private Limited. So the location of this wind project will be in Chitradurga, Karnataka, and the capacity of this wind project is 300 megawatt. And JBIC is not the only financer. The other financiers are Sumitomo Mitsui Banking Corporation, Bank of Yokohama Limited, Shiga Bank Limited, and Bank of Fukuoka Limited. So these are the other 4 financiers. The main financier is JBIC and the amount is 25.5 billion Japanese yen. And the Power Finance Corporation chairman and managing director is Parimandra Chopra. It is headquartered in New Delhi. The next news is about an appointment. So SEBI has approved the appointment of the MD and CEO of the Multi-Commodity Exchange of India. So this is the exchange where the commodities they trade, just like you have stock exchange, right, where the shares of various companies trade. Similarly, the commodity derivatives they trade in the stock exchange, and the MD and CEO is Praveena Rai. So she will replace the Padala Subbi Reddy. So she will succeed Padala Subbi Reddy. Remember, it is Praveena Rai, MD and CEO of Multi-Commodity Exchange of India. So it had started its operation in November 2003. The chairman is Dr. Harsh Kumar Banwala and is headquartered in Mumbai. Next news is about a fractional ownership platform getting an REIT license. So what is this fractional ownership? See, one person buys one entire home which is costing around 1 crore, then he gets a full ownership of that particular property. When it costs like 1 crore and when people don't have money that much, then what happens that many people come together and invest their part in that project, and then they get a part of the ownership of that project. So in this case, if you see, around 10 people they invest in this project and each gets a share. So 10 share for 10 people, so it is 10 lakhs. So each ownership is around 10 lakhs. Then the rent from this property is the return for these investors. So this is called as the fractional ownership. Generally in the commercial properties, it's very huge in amount. So people collectively invest and get a fractional ownership in that property, and then the return is their rent is their return for that investment. This is called as fractional ownership. Here, if you see property share, India's first fractional ownership, it gets the small and medium REIT, that is Real Estate Infrastructure Trust license from the SEBI. So remember, the name is property share and it has got the small medium REIT license from SEBI. And this will be listed. If you see, this has got the license under the name called Property Share Investment Trust. So this is the name under which it has got the license, that is Property Share Investment Trust. The next news is about an exchange traded fund. The main difference between a mutual fund and exchange traded fund is that here they can be traded in the stock market, but here these cannot be traded in the stock market. This is the main difference between mutual fund and an ETF. So if you see, the Mirae Asset Investment Manager, they have launched India's first multi-cap ETF. So this will track a Nifty 500 multi-cap. So if you see this, there's a ratio given here, that is 50:25:25, which means 50% weightage will be given to 100 large cap stocks and 25% to 150 mid cap stocks and another 25% weightage to 250 small cap stocks. So remember this weightage. So Mirae Asset is the first, Mirae Asset has launched India's first multi-cap ETF. So here if you see, the minimum amount of investment is 5,000 and then a multiple of 1 rupee can be then invested in this multi-cap ETF. And there is no exit load. So if you want to sell and exit, then you will not have any exit load on this ETF. The next news is about a GDP projection. So SBI, State Bank of India, it had predicted that India's GDP will grow at the rate of 7% for financial year 2025. Similarly, if you see, RBI had projected 7.2%, ADB has projected 7%. So here State Bank of India also projects 7% for the financial year 2025. So reason for this projection is that enhanced fiscal buffers supported by dividends. So if you see, even the fiscal deficit of financial year 24 was 5.6, way lesser than the budgeted estimate. So this strong fiscal deficit also gives a strong, it is also a main factor for this growth projection. And apart from that, even anticipated recovery in agriculture driven. So we see good monsoon conditions. So because of that, a good agriculture production is also expected. So that is one of the reasons. The last one is push in private capital expenditure and strong manufacturing activity. So these are the reasons for a strong GDP estimation. Next is about a credit card that has been launched. So Axis Bank and Visa, they have together launched the credit card called Primus credit card. So this is mainly for the India's elite, that is for the ultra net high worth people. So remember, it is Axis Bank plus Visa has launched Primus credit card. Apart from that, Axis Bank had launched a second Sparsh Week 2024. This is a customer-centric initiative by Axis Bank. So they conduct activities which are focused for its employees and the customers. So remember, Sparsh Week is by Axis Bank, and Axis Bank and Visa together they have launched this Primus credit card for the high net individuals. The next is about the FPI investment. So RBI it has notified that FPI investments can be made in the sovereign green bonds at IFSC, that is International Financial Service Center. So RBI it has approved the FPI, that is foreign portfolio investors, to invest in the sovereign green bonds at the IFSC Gujarat. So here we know the sovereign green bonds. Here the money borrowed from this through the sovereign green bonds will be used in green projects like renewable energy projects, non-fossil projects that will help in reducing the carbon emissions. So this is the purpose of the sovereign green bonds. If you see in financial year 25, in the first half, government planned to raise 12,000 crore via the sovereign green bonds, but until now they have just raised 1,697. Recently also there was an auction of the sovereign green bond by Reserve Bank of India, but it got cancelled because the people were expecting more amount of interest. So there is always an interest or coupon rate attached to a bond, right? So there was one interest rate attached to the bond. So, but the people were expecting more. So the bid from the investors were more. The interest rate expectation from the investors were more than the interest rate provided by the sovereign green bond issued by RBI. And so since it did not match, the sovereign green bond auction was cancelled. So this is what is the recent news about sovereign green bond. The next is about the NPCI, National Payment Corporation. So NPCI, it has incorporated NBSL, that is NPCI BIM Services Limited, as its wholly owned subsidiary. So remember, NPCI, it has incorporated NBSL, that is NPCI BIM Services Limited, as its wholly owned subsidiary. So what is the reason to this incorporation? This is to increase the digital transaction and financial inclusion in the country. So if you see, the CEO of NBSL is Lalita Nataraj and the Chief Business Officer is Rahul Handa. So remember this name, Lalita Nataraj, very important, and NPCI has incorporated NBSL. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer or regarding any payment issues. You can contact on directly on this number. Thank you.